Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So the market, the prior low is down here about 145.50. Now, I'm pretty confident already that we're not going to break support here at about 147. So I'm really confident that we're not likely to break support at 145.50. And although I think that there's a chance that the market may go flat, or it may even decline a little bit, I could sell an option with a strike price down here at 145.50 that gives me an opportunity to profit as long as the market doesn't break that level. So, for example, let's say that I bought a put or that I sold a put option. So I'm going to write a put option with, about 21 days, 23 days left to expiration, and at the time, during that day that I have kind of squared out there where the market was about 147, a put with a strike price of 145.50 was paying about $1, so about $100 per contract. Now that sounds pretty good, and in fact. Because what it does is it gives me a little bit additional protection. In fact, I can draw another line here which says that not only am I confident that the market is probably not going to break this support level, but because I sold that option, that premium gives me a little bit of buffer. So I'm going to draw another line here as to, that's about how far the market could go by expiration. So if the market closes below this line here by expiration, then I've lost money. As long as it stays above that level, I've made something. As long as it stays above this first support level that we drew, I've made the entire premium. So what I've essentially done is, this is where I mentioned when I started my presentation that what selling an option allows you to do is to kind of make a bet as to where, or to speculate where the market is likely to not go, rather than where you think it's likely to go. So in this case, making that decision at the beginning of November, I'm not really I'm not really speculating how far the market's likely to go up, or whether the market's to go flat, or even whether it's likely to decline a little bit. I'm just saying that it's probably not going to decline a lot. And so I'm putting, if we were to, this wouldn't be appropriate, but if we were to say, well, shoot, the market will go one of four directions. I've kind of covered three of those, so if it goes at 1 out of 4, then I'm going to accumulate some losses. But so I've created a higher probability trade. Now, I'm only going to get paid that $1 though, so that's where that trade-off comes. But I find that a lot of traders who begin to trade Forex options, they tend to gravitate this direction. A lot of them will tend to gravitate this direction because it is a little bit simpler of an analysis. Now, let's go forward a little bit. I'm gonna delete these two support lines, and I'm going to talk about this from the perspective of today. How would we address this same opportunity? Theoretically today. What if I were making this decision right now? And I'm going to extend my trend line here, and you'll notice that here recently the euro-dollar exchange rate has been bouncing up, or has been sitting on top of that same trend line. And in fact, today's candle, as you can see, came down, just nicked it, and kind of came up a little bit. So the dollar did strengthen a bit today, but not a lot, and not enough to break through that trend line. So if I were making this decision, I'd be going through the same process. I'd be saying, well, okay, how likely do I think the market is to break the 150 level? We still haven't been able to break it. I'm not very confident that we're going to be able to do that at all. So do I want to go long the underlying currency pair? Maybe not. There's a chance of being whipsawed there. Do I want to buy a call? Well, maybe. If I were more confident that we're going to break resistance, then perhaps I'd be more interested in it. Or do I want to make an estimate as to, or speculate where I think the market might not go? So I'd run through the exact same scenario. Say, well, what was the prior lows? Well, the prior low is down around 147 or so. And so I could be looking at, well, what are the 147 strike prices paying right now for December's expiration? And if we were to So right, as I was putting together some of the things I was going to talk about today, I pulled a quote just before the market closed at about the 147 strike price. And the market's moved a bit since then, but at the time, it was paying about $1.20. So put a little dollar sign there so it's clear what it is I'm talking about. So what that gives me is that the 147 strike price, I've got $1.20 in premium, which, times it by 100. And essentially I have coverage that goes down below 160 here. So to about 150, I want 145.80. So I've got a little bit additional coverage that gives me some protection to the downside. So what I'm essentially saying is that, hey, the market is, it could go up, it could go flat, it could even go down a little bit, but as long as it stays in this area here, I will walk away with some profits. As long as it stays above my strike price, I walk away with all of that premium, that $1.20. So this is why traders gravitate this direction. And it's interesting, there are, traders gravitate this way. I find, when they first start trading options with, covered calls, as I suggested before, and a lot of traders who start trading currencies, which is very exciting. It's a super leveraged market generally, whether you're trading it in the futures market or whether you're trading it in the over-the-counter spot market with a dealer or somebody like that. It's exciting and it's fun, and the leverage is really extreme, but you have very limited control. And so I find that as currency traders mature in their experience in the market, a lot of them tend to start to gravitate towards Forex options because it's a opportunity for them to introduce a lot more flexibility into their trading. Let me pull up another easy example. This one here, this is the index for the Canadian dollar. So this is actually the dollar versus the Canadian dollar. And so if you're looking at it like that, and this is the underlying index that those options from the ICE are based on, the symbol CDD. So unlike the euro dollar, where the dollar was the quote currency, we were seeing things, this one, the Canadian dollar is the quote currency. So what we're seeing here is that it costs $1.05 Canadian to buy a US dollar. Recently, the dollar overall has been devalued relative to other currencies. Not necessarily relative to purchasing power, but it has been falling in value recently, or for most of 2009, relative to most currencies, and we see that is true with the Canadian dollar. In fact, I can zoom out here a little bit. The Canadian dollar is very sensitive to oil prices, as not just the intrinsic strength of the dollar itself, or the strength of the Canadian dollar itself, but also to oil prices. So, since we've seen a rally in oil prices, we've also seen a rally in the Canadian dollar, which means that this particular trend will be going down. It's costing fewer Canadian dollars to buy a dollar because it keeps getting stronger. So let me zoom back in here again. And this is, again, one of those situations where we can, if you're more comfortable using exchange rate charts, which are available for free just about anywhere, we could also look at the exchange rate itself. So I just switched charts, but they should look really similar, except that this one's the exchange rate. So you'll notice the decimal place just moved. So this is 1.0507. So it's the same price. It's just moved over decimal places. So this is really straightforward. If you have any familiarity with how exchange rates work and how the Forex works, it's very simple to switch over and start trading Forex options and get all that additional flexibility.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.